afternoon and good evening to all. Myself Vaibhav. I welcome all of you to today's third and the final session of the Visual JForex involving the indicator TDI, which stands for Tom DeMark indicator. This is the session in which we will be completing the sales side of the equation. So now let us get back to the Visual JForex board, which has been developed by the Dukascopy Bank SA. In the last two sessions, we had finished the algorithmic structure so far, which included the instrument subscription where the instrument of choice is USD JPY. Afterward, the position amount was defined at 0, and I have added these TDI blocks of the 15-minute candle period to define the conditions for the execution of the trade in a profitable manner so that we have higher probability of ending the trade in profit. To look at the price volatility, we are also taking the help of get historical candle of the hourly candle period. And to pinpoint the exact entry point, these two 10-second blocks are also being used. To define certain values, the conditions, we have also taken into consideration these calculation expressions. And on the lower side, there is the buy side which has been completed. Now we start the work for the sell side. First, I will give you a brief refresher of what the logic is for this algorithm to work. So we now head to the JForex. This is the USD JPY chart which has been plotted on the 15-minute candle period. We want the trade system to be simple and we are simply relying on the TDI output values. For sell side, we will be looking to initiate the trade as and when we see the TDI value dipping below these low risk parameter of 0.7. So we are comparing this line output with the low risk output. Low risk output is constant at 0.7 and we want to initiate the trade as we see that the underlying momentum is now shifting on the bearish side and we have the possibility of the underlying instrument dipping on the lower side after having spent considerable amount of time above this 0.7 value, and now this might be the time where the reversal is happening, or even you can count on some sort of correction. And to make sure that we don't really trade against the trend, we are also taking the help of the price action data, and for that we are going to use the get historical candle data. We will be comparing the high of last hour with the high candle high of the historical candle 6 hours back, and there we will see that this difference between these two hourly candle should not be more than 15 pips. So we will need the calculation to be done where we will have to deduct the high 6 hours back from the last hourly candle's high, and the difference should be less than 15 pips. And on the TDI front, all we have to do is take into consideration last two 15-minute blocks of the TDI. In the last 15 minutes, the TDI output value should have been dipped below 0.7, whereas in the penultimate 15-hour candle, it was above 0.7. So that is the requirement. And as and when the conditions are in place, we will be looking to initiate the trade as soon as price starts to dip below the last 15-minute historical candle. So now all we have to do is get the calculation done. For that, I will have to add one calculation expression block. Here we take into consideration the candle 16 candle high and candle 17 candle high. It has a shift value of 1. So this is the last hour's price data, and we need the last hour's high to be higher, not more than 15 pips from candle 17 candle high. So I will take this candle 16 candle high and deduct candle 17 candle high. Okay, so we have A1 minus A2. I'll name it SDC, this newly created variable, which we will need to then compare with this predefined value of 15 pips. Okay, now we join it on the lower side and we start adding the if else blocks for defining the conditions, and we need the formation to be symmetric. So the equal number of if blocks will be used afterwards. This trade command block will be added. And here we take component, logical component. One, and after that the trade command block. Okay, first thing first we do is compare the output values of the TDI. We want line 14 to be less than low risk of 0.7. The low risk is denoted, this higher line, upper line is denoted as low risk, and as I said earlier also it has a constant value of 0.7. So I take this line 14 and compare it with low risk 14, and here it should be first input less than second input, whereas in case of line 15 it should have been higher compared to the low risk. So we will have to define it as higher, first input greater than second input. And after that we turn to the price action data. We need this difference, the actual difference between these two hourly candles, to be less than 15 pips. Okay, so we need here first input less than second input. All right, then we compare the price action data of the two 10-second candles with the get historical candle of 15 minutes, and as soon as price starts to dip below the last 15-minute candle, we will look to initiate the trade. So we have to consider candle 27 candle close as the common input for both these blocks. Auto created variable. Candle 27 candle close. And we take candle 18 candle close and candle 19 candle close and compare it to the candle 27 candle close. Candle 18 has the look back period of 1, so we will need it to have closed lower. So I will take candle 18 candle close, first input less than second input, and we will also need candle 19 candle close, which is the penultimate 10-second candles closing value. It should have closed higher. First input greater than second input. So we have these if else statements in place now. I will join it to the multiple action, and all we have to do is define this parameters of the trade command block. Is going to be a sale order. Default instrument remains USD JPY. Trade amount I will change to 0.1 million. Slippage is also going to be changed to 2 pips. 2 pips is good enough for USD JPY. Stop loss and take profit, we will keep it equal to what we had defined for the buy side, which is 10 pips and 15 pips. 10 pips for the stop loss and 15 pips for the take profit. This is more of a scalping kind of formation, scalping strategy, as we are relying on the lower time frame of 15 minutes. So for that, I think the combination of 15 pips to 10 pips is good enough for the instrument of USD JPY. This will be 10 pips and take profit is going to be 15. Okay, and with this our sell side is complete. To check whether the trade iteration flow is going all the way till the very end, I have color coded this flow, and yes, it looks to be working fine. And also our formation is symmetric, so both these requirements have been fulfilled. And with this, as the algorithm is complete, the session is also coming to an end, and I would recommend that you try it out on your own, and whenever the algorithmic structure is ready, you also have to carry out extensive testing on the historical data, and only afterwards you can draw a conclusion whether the underlying formation is profitable or not. So I would suggest you do the same, and you can of course let me know in the feedback section. Thank you all for joining in. Don't forget to check out the Dukascopy Analytics page for more research material. We are also available on the Facebook. You can reach out to us there too. Thank you all for joining in. See you next time. Till then, goodbye.